Insurable interest and indemnity. Most and until 2005, all common law required the insured to have an insurable interest in the subject matter of the insurance. An insurable interest is that legal or equitable relationship between the insured and the subject matter of the insurance, separate from the existence of the insurance relationship by which the insured would be prejudiced by the occurrence of the events insured against, or conversely would take a benefit from its non-occurrence. Insurable interest was long held to be morally necessary in insurance contracts to distinguish them as enforceable contracts from unenforceable gambling agreements binding in honor only, and to quell the practice in the 17th and 18th centuries of taking out life policies upon the life of strangers. The requirement for insurable interest was removed in non-marine English law, possibly in Indemnity, by the previous of the Gambling Act 2005. Situation needed, it remains a requirement in marine insurance law. In other common law systems, however, and few systems of law will allow an insured to cover in respect of an event that has not caused the insured a genuine loss, whether the insurable interest is relied upon or whether, as in common law systems, the courts rely upon the principles of indemnity to hold that an insured may not recover more than his true loss. Utmost good faith. The doctrine of Abraham fights utmost good faith is present in the insurance law of all common law systems. An insurance contract is a contract of utmost good faith. The most important expression of that principle under the doctrine as it has been interpreted in England is that prospective insured must accurately disclose to the insurer everything that he knows and that is or would be material to the reasonable insurer. Something is material if it would influence a prudent insurer in determining whether to void a risk, and if so, upon that terms. If the insurer is not told everything material about the risk of if a material is made, the insurer may avoid the policy. The insurer may treat the policy as having been void from inception, returning the premium paid. Reinsurance contracts between reinsurers and insurance cedents require the highest level of utmost good faith, and such utmost good faith is considered the foundations of reinsurance. In order to make reinsurance affordable, a Ryan cannot duplicate costly insurer underwriting and claims handling costs and must rely on an insurance absolute transparency and candor.